It's Tuesday, September 13th, 2016. This is Ron Feinstein, New Wave Forecasting. I'm going to ramble on for a few minutes here about the markets and what I see coming up here for possibly tomorrow and implications further out into the future. Starting off the S&P 500 and the broad stock market in general, you know, I have not turned my official Timer's Digest signal bearish yet. However, I have considered it every day now here for the last 5. I'm not too thrilled about what the market's done here. However, there are some things underway here that I think need to be taken into consideration. Primarily, we've got an option expiration coming up here, a big one. Prices don't typically have a big directional move the week of option expiration because there's so many people short on the professional side. And I think a lot of what we saw today, even though there was a big move in the market, if you were long puts, you didn't actually make money today, or you didn't make a lot of money today. So the key right now is that the S&P's as bad and wild as the market may be, the trend by definition is still up. I would feel that a move back above 2155 here, this is pretty much where the breakdown occurred, would be, boy, that would be really bullish. I think that would just be a really bullish development if you could get back above that 2155 level. And I just don't know. Everybody in the world is going to be focusing on the trend line, which really may or may not make any difference if we break 2100. I don't know that it's a big deal, but I think it would certainly be scare the living crap out of most people if we do continue lower here. So I don't see it coming tomorrow. I think tomorrow we could have an inside day with a pretty decent close. We're currently trading around I think 2128 in the December and 2136 in the September contract. So I think that again, not likely to see the market melt down tomorrow, and we'll just have to see. I probably should be in a neutral position here in Timer's Digest. That would be the appropriate place, I think, and I may just make that shift tomorrow. But again, given likelihood of an inside day, decent close on Wednesday, I don't see any reason to act in advance of that probable event. Here's the options array. These are the options that are going off on Friday the 16th. And the September is currently trading at 2136. So the 2135 straddles currently trading for about 14 and a quarter, 12 and a half on the offer side. So call that 26 and 3/4. It's with 3 days in, that's pretty rich. So, it's pricing a little bit of volatility, but not necessarily a huge dramatic directional move. But one thing I would point out here and why I think this is bullish right now is that the calls are all up and the puts are down. So if you came in long or held puts after the session's end today, you're really going to eat them bad tomorrow. So that's also, I think, a pretty bullish thing. So I'd say that at the moment, short-term picture for the S&P looks actually bullish. Just want to take a couple minutes here. Not much to say about the euro. I think the euro is going to chop lower. I think we're setting up for a pretty strong buy opportunity, probably on a test of the 111 level again, possibly into October. So I'm just this one's on the back burner. I recently turned neutral again on this one, and I'm still overall looking for an upside resolution out of this mess. But again, this is not going to be an easy trade here. This is going to be buy dips and sell rallies, and they could be kind of scary along the way. But I do think that at some point, looking for the euro to test 111, and at that point, I'm hoping to get bullish again. The metal's been kind of wacky lately, like everything else. But gold just came right down to the 76% retracement here this evening on this dip of little breach of 1320 here. I've got some good RSI momentum divergence. I personally just bought gold. I think there's a short-term play here. I don't know what's going to happen, but given we could be in a stupid trading range, I think there's a really good chance that the next $20 move in gold could be up. 1335 is obviously going to be an interesting level where sellers will have to make a stand. But again, if we can get through 1335, we could very well work our way back above 1345. So again, I like the long side of gold here. I think the risk is pretty well defined and an interesting play. Nat gas is really at an interesting place. My forecast, if it's right, says that the next 20-cent move in nat gas, possibly even 30 cents, is going to be straight down. I think we're probably going to have to see what happens into Thursday's report to see how this comes together. But, this is a classic new wave setup here where we have a dangerous, situation. It's just plain and simple a danger zone. I mean, if you have been long above nat gas above 290 here for any time in the recent past, it has been a very difficult trade, and I don't have any reason to think that's going to change. So probably looking at another bull trap setup here in nat gas, and if it busts, I think a break of 290, we got to then watch 282.5. But again, I'm not convinced we're not on our way to 255 here. So this is a really important market to be keeping an eye on. Nat gas, very interesting play on the short side. Going to finish out here today with a little quick look at the crude market. I think there's a good chance that crude is just going to chop here between 45 and 46 for another day or so. I want to see the market come off towards $44. I think at that point we've got a really good setup for a buying opportunity. It may not be a bad buy here just above 45, but again, this is a dicey one. Risk reward, I'd rather be on the buy side than the sell side. I just don't know about the timing here. So anyway, watch for the intraday updates tomorrow. Gold's continuing to pick up a little bit here. Ron Feinstein, New Wave Forecasting, and September 13th. Back again tomorrow.